Okay. Sound check. Uh, Sound check. Hope everything is working. Okay, let's go. All right. So, hello, good morning, good afternoon, good evening, and good day, regardless from where you're going to be watching this recorded stream, or maybe you're joining me live. You're welcome. I appreciate you. Thank you very much, all of you. So last time I talked about the market structure that we should build the monthly bands, right? Yep. So before I continue, let me quickly introduce myself. I am Javan FX right here on YouTube, okay, all the way from Brazil. So my mission, like I stated in my previous stream, my mission here is to help forex beginner analysts, okay. So, and why am I using the word analyst? Because we are not a trader yet. So for us to emerge to become a trader, we must first of all be a good analyst. All right. Yeah. So that's the way the stuff works. Okay. We must be a good analyst. So right now I'm a beginner analyst, and hopefully some of you guys that are going to be watching the stream, okay, hopefully beginners like you or like myself, before we become a trader, we must become a good analyst, and this is the beginning. So my mission here is to share the foundation. When I mean the foundation, the beginning, the scratch of forex course. All right, that is what I'm offering to my viewers, everybody, anybody around the world. All right, so if you are just viewing this stream and it seems like you don't understand the information I'm sharing, please watch my first video. Okay, hopefully it's my first video right here on YouTube. All right, so you want to watch it and try to get the message of what I'm trying to share right here. All right, let's quickly dive into today's lesson, which I believe is not going to take much time. Okay, so today we are talking about highs and lows. Okay, how to identify highs and lows in the forex market. I'm sorry if you guys cannot see my face. I'm a new guy in this stuff. Okay, hopefully the upcoming weeks I'm going to try to see how I'm going to fix my face so that you guys can see the guy talking behind the stream. All right, guys, sorry about that. So today we are going to be learning about highs and lows and how to confirm a market that is high, or a trend that is confirmed high, and a trend that is a confirmed low. All right, let's go. First of all, let us look at this right here. What is a high and low in the forex market? Okay, question: what is a high? A high is a center candle with two candles by the left and two candles by the right with lower high value. Okay, and what is a low? A low is a center candle with two candles by the left and two candles by the right with higher low value. All right, now this part is set. What is an uptrend? Okay, so an uptrend, a lot of us know how to confirm an uptrend. Okay, but there's something I'm going to be showing to you guys today to really help you confirm what an uptrend is and what is a downtrend. And some of us that like this market pattern that is called double top and double bottom, how do you confirm a market that is a double top and double bottom? So I'm going to be showing you all of that as we get to learn what is a high and what is a low, as when we are going to switch into the live chat and look at this in the live chat. All right, guys, so let us continue. Now, what is an uptrend? An uptrend is when we have a minimum of two highs and two lows, when the second high and the second low are a higher high and higher low. All right, and in reverse, what is a downtrend? A downtrend is when we have a minimum of two highs and two lows, when the second low and the second high are what? A lower high and a lower low. all right, and as you can see the picture, the description right here, all right. Okay, now something for you today, okay, is something for you that when you are trading the market, the short-term trend, maybe the short-term trend is up, the short-term trend is down, you want to take note of what I have written down for you here, all right. The process, we need to identify the long-term view. After identifying the long-term view inside the market, for example, we have to identify the long-term view from the market structure, okay, based on the monthly bands, all right. After that, we also need to determine the short-term view from the short-term trend, okay. Overall, we must always trade in line with the monthly bands in mind. Yes, so if we are on the smaller time frame, 15 minutes, 30 minutes, 5 minutes, even 1 hour, 2 hours, 4 hours, whatever we are doing on those smaller time frame, we want to make sure that we are aligned with the monthly bands. Yes, okay. For example, we are going to go to right here. For example, this is a NZD card we've already built. Okay, my first video was talking about building the monthly band. So this is the monthly band resistance area, okay, and this is the support monthly band area. So it is not a line, it is a pip. So if you are new to this my channel, please watch my first lesson and learn how I talked about on how to draw the monthly support resistance band. Okay, so the long-term view, okay, as we talked about right here, okay, we need to identify the long-term view. So how do we identify the long-term view? All right, so we identify the long-term view using the monthly bands, all right, the monthly bands area. So the long-term view in this market right now is going to be that market should fall to the downside, so it's going to be all the way down, all right, like this. So the long-term view is down, okay. So the long-term view on the monthly time frame is down. Also, we also have the long-term view on the weekly time frame, okay. If we look at the weekly time frame right here, right now, before I go to the weekly, let me go back to the monthly, all right. The reason why I said the long-term view is down is because, all right, as I explained in my last video, when the market came to this support area, you can see the market gravitates to this level of resistance, okay, came back to this level of support, all right, maintaining this level of support back in time, all right. And like I explained in my first video, the forex business, okay, is about export and import between Netherlands and Canada, okay. All those countries, they do export and import business. So their establishment, okay, their trade and their trade agreement, okay, is what we are looking at right here, trying to make pips from it, okay, between these bands. So this is how they establish their trade business, all right, from one band to another band. So long term, we're expecting price to come here, all right, long term. So this is the reason why I said the long term view on the monthly time frame is down right now. Now that we've identified the long-term view using the monthly bands, support and resistance areas, okay, now we know that on NZD card the long-term view is going to be down, all right, price needs to go down. Now what is the short-term trend? Because that is the next thing we have to look at for, all right, that is the next thing. So if we look at the market at this level back in time, we can see that this is the very previous high. So we have extension, we have retracement, and we have extension, okay, right here. So in another vocabulary, we can refer to this as what? Okay, we have impulse, correction, impulse, all right. So those retracements are referred to impulse in another vocabulary, all right, and while the extension are referred to impulse, all right. So that is what we have here right now. Now inside this long extension leg, okay, on the monthly time frame down here like this, what was the market doing back in time? Know that we can clearly see that the market was making lower lows, lower high, lower lows, lower high, lower lows right here, We can see that right now. And previously, definitely, I'm going to be talking about how to draw the trend line, but back in time, this was how the market was. All right. So we are not going to break wicks and body candles, okay? But back in time, we can see clearly right here that the market broke this candle to this upside and started pulling down. And at this moment, we can clearly see that the market made a higher high right here compared to this high. All right. What does that mean? It means that the market, this downtrend, the market made a new higher high. Now the question now will be, is this market going to make a new higher high after this high, or it's just going to continue to fall to the downside? Well, we don't know for now. So we just want to focus on today's lesson. And what is today's lesson? Today's lesson is about confirming a high and a low. All right. How do we know that this market made a higher high? Now, that's the question. Because previously we can clearly see the market was making a lower lows, lower high, lower lows, lower high, and a lower low right here. All right. Then the market made a high. How do we know that this market made a high? Well, we can clearly see, okay, we can clearly see it from here that the market made a high. All right. It's not difficult to really identify. All right. The market did make a high that is higher than this high. But then what is another way? Like I said, I'm going to be showing you guys another way to confirm, not just looking at the market. What if this high is still higher than this high? In some scenario, you're going to see two candles, okay, so close to each other, you will not be able to identify which candle is a high and which candle is a low. But if you look at this area here, okay, right here, okay, this area here, look at all of this area. You see those numbers moving, okay, changing numbers, okay. That is where you identify which candle is a high and a low. You can see this O right here represents, okay, an open of a candle. This H represents the high of a candle. This L represents what? A low of a candle, while the C represents what? A close of a candle. So if I move my mouse, for example, if I move my mouse now to one of these candles, for example, let me move my mouse to this candle and join me to look at this H, the number, while I move my mouse to this candle right here. As you can see, the number there is 0.88181, okay, 88, all right, 0.88181. Now let's check out this other candle, okay, back in time at the left hand side, which is this one. What is the number? It is 0.88083. Remember that this one is 0.8818. So that one is the one differentiating the numbers right now, okay? So we have this one 0.880. This one is 0.881. All right, so this is the number right there is telling us that this candle is higher than this candle right here. So we can easily tell what is a high. Now we talk about the definition of a high, all right, right here. Like, what is a high? A high is a center candle with two candles by the left and two candles by the right, okay, with lower high values. Now let's go to the chart and quickly look at that. This is a center candle right now. You all agree with me that this is a center candle here right now, okay? Now if we look at right here, okay, we have two candles by the left, no doubt, okay. We have this candle 1, we have this candle 2 by the left. We also have this one, okay, by the right 1, and we also have this one by the right. Now if we look at the numbers of those candles, all right, so let me just take this stuff, okay. Instead of looking at this one right here, we're going to look at this. So we have this one right here, we have this right here, we have this, okay. This is another tool given to us by TradingView we can use. It's called price note, okay. It's called price note. We can use it briefly, okay, and it's faster, okay. All right, so these two candles, we can see the numbers here, 0.84790. This one is 84. This one is 0.79 498. This one is 0.88181. All right, and this one is 0.87339. This other one here is 0.86806. So if you look at all of these two numbers here, okay, these two numbers here, we will see that this one is higher than this. All right, because this one is 88, this one is 87, this one is, and this one is 86. All right, so it shows that this one is higher than these two candles. And for a fact, if you look at these two, it's very clear that these two are high. This one, middle one, is higher than these two candles. But whenever we want to chart the highs and lows of the market, okay, guys, let us make sure that we always check the highs and lows. Let us, for any reason, let us not think that, oh, this candle, just looking at it, it is higher than this one. Let us not do that mistake, because I have made such a mistake several times, and at the end of the day, I paid dearly for that, okay, because of not identifying the highs and lows very, very well. So let us not make a mistake and say, from what I can see here, this candle is high. We must confirm it. We must look at the numbers. All right, guys. Okay, it's very, very important. All right, now that is that for a high. All right, what about a low? Okay, when we talk about a low, what is a low? All right, we already look at the definition right here. Okay, what is a low? A low is a center candle with two candles by the left and two candles by the right with lower high value. All right, now let's look at a low. Okay, now back in time, okay, this is a downtrend already. It's already confirmed. But for example, how do we confirm that this is a downtrend? All right, this is a lower low right here. All right, so back in time like this. Now how do we know that this bullish candle is not a lower candle than this bearish candle? How do we know? All we just need to do is do the same thing. All right, because if we are not careful, we can see very well both of them have a wick below, a very tiny wick. So if we're not careful, we'll not be able to identify which candle is a low among the two. And we learn from what we are studying right now that a low is a center candle with two candles by the left. All right, so we're just going to do the same thing. All right, so this is we have this one here, and we have this one too, okay, here, and we have this one. For me, this one is a center candle, right? I can already see that it's a center candle, but let's check it all together and let's confirm. Now let's look at the numbers of those four candles. Which one is lower among it? Okay, remaining one, the center candle. For me, this is the center candle. All right, now let's check this number. We have two bearish right here. Okay, we have these two bearish, this one. Now let's look at the number. This one right now, this one is saying 0.86568. This one is 0.85526. So this one is 0.86, this one is 0.85. all right, now this middle one says 0.83. all right, this one is 0.85, 0.86, this one is 0.83, and this one is 0.83. all right, this one too is 0.83, this one is 0.83, this one is 0.85, so this one is out of it. Now these two right here is 0.83, 0.83. Now what will differentiate it among it? Let's look at it. This one is 0.83426, this one is 0.83475. What does that mean? It means that this is higher. Okay, it's higher. Okay, the value of this candle is higher than this one. So this one is the low high value. All right, so we're just going to take every other drawings out, and this one is the lower center candle with two candles by the left, two candles by the right with what? Let's check. Okay, with higher low value. All right, so a low is a center candle with two candles by the left, two candles by the right with a what? A lower higher value. Am I correct? yeah, with a higher low value. Okay, with a higher low value. A low is a center candle with two candle by the left, two candle by the right with a higher low value. Okay, and a high is a center candle with two candle by the left, two candle by the right with a lower high value. All right, so that is how to confirm a market that is in a downtrend. Okay, because we can't just say, oh, this market is a downtrend. No, no, we must confirm, we must have that two candles by the right and two candles by the left. And if you're looking at a double top also and double bottom, for example, all right, that is how to confirm it also. Now if we're saying, for example, this candle, this market here back in time right here, all right, just what we have right here. Okay, first top, okay, and second top. All right, now back in time, this, let's say this is what we have back in time, for example. Okay, let's say this is what we have. We cannot call this what a double top right now. All right, just from what we are studying right now, we cannot call this double top like this first top and second top. No. Why? Because we need two candle by the left. All right, now we have two candle by the left. Okay, let's say this is what we have. Once this candle closes down here like this, now we have a confirmed, okay, excuse me, okay, now we have a confirmed double top, okay, like this right now. And we're just going to be looking for sell opportunity. Okay, if it is sell that we're looking for, we're just going to enter the market and put our stop loss at the right place on the smaller time frame, hopefully, because the market did sold. All right, the market sold back in time. From here we can see that the market fall all the way to this level. So on the smaller time frame, if we spot a double top like this, confirmed one, and we said definitely we are going to make pips, because we understood very well, or understand, okay, what is a high and what is a low. And also that also goes to what is a downtrend. Okay, what is an uptrend, what is a downtrend. So in this case, this is a downtrend right now. How do we confirm that this is a downtrend? We look at the definition right here. We talk about an uptrend. Okay, let's look at the downtrend first. A downtrend is when we have a minimum of two highs and two lows, when the second low and the second high are what? A lower, oops, excuse me, when the lower, when the second low and the second high, okay, are a lower high and a lower low. All right, and that is what we are seeing here right now. We have a lower lows, lower high, lower lows, lower high. And this would have been us back in time on the smaller time frame, hopefully entering this market right here, and we're going to make profits. Counter trend line break right here, enter the market, and bam, all the way. And this was a bearish candlestick formation. Stop loss goes here and take profit down all the way here. So if we follow through like this on the smaller time frame, we're just going to be making pips in this market, you know, easily. Okay, because we have studied in the right way and we are implementing what we have studied in the right way, and at the end of the day we are going to get our result, and our result is going to show to us that yes, we did study very well and implement very well, and with positive results, it will show that we have really learned something very important that is going to help us make money in the future, and financially we have that freedom because we have been taught the right way to trade this business. As all of you know, trading is a learnable skill only when we learn or studied in the correct way, implement in the correct way. Then our result is going to be positive, and it will show that yes, we really studied very well and we have learned something that will help us in the future. All right, so talking about an uptrend back in time, as you can see right here. All right, so this is an uptrend. So the same application of a downtrend also applies to an uptrend. We need to confirm the high. Okay, we must confirm the low. All right, we must confirm the, excuse me, we must confirm the low. All right, we must confirm the high, we must confirm the low, we must also confirm the high. So all this market is at the level of monthly resistant band area. So I'm just using this area for an example, but if we go to the smaller time frame, we can better make a better analysis properly, and we are going to see how the market worked back in time and how a lot of traders who already know about this concept, all right, this trading skill, okay, this foundation, this beginner stuff, because what I'm teaching right here right now is simply beginner stuff, complete beginner stuff. As a matter of fact, like I said earlier, it is the foundation of this business. All right, if you don't know the foundation of this business, believe me, both you and me, we are absolutely going nowhere in this business. Yes, while others are making pips, making money, we are just going to be there, and we don't want to be like that. As a matter of fact, we want to join, professional traders all over the world to make pips in this business like they are doing. So back in time, this is an uptrend, all right, and we would have buy this market back in time. This is the daily time frame, higher highs, higher low, okay, and higher high right here. So back in time we have this, and if we are not careful back in time right here, okay, if we're not careful back in time, we wouldn't anticipate that this candle right here is a low compared to this candle here. Okay, it is obvious, all right, it is obvious. We have to always, okay, we have to always confirm. We don't want to confirm with our eyes. We don't want to just look at the market and say, oh, it is a low. If we look at it right here, okay, this one is, okay, a high, but these two right here, okay, we have this one at 0.86, okay, 86306. This one is 0.86284, so it shows that this one is a low. All right, so we are just going to take this and say, oh, this is a higher highs, higher low, higher high. And back in time, since we already confirmed the high, because we must wait for these two candles to close also, 1, okay, and 2, to confirm that this is a high, because we already learned right now what is a high. Okay, a high is a center candle, 2 candles by left and 2 candles by the right with a lower high value. All right, so back in time, the way we would have entered this market would have been so easy. Okay, counter trend line break. Okay, so this was the break of the trend line right here. This candle closed above here, and we would have entered the market. Stop loss goes at the pattern traded, which is going to be here. Okay, stop loss would have gone to this level back in time, and we would have won that trade because the market did came down. All right, so if we have our stop loss right here, because different patterns that we trade have its own stop loss. All right, stop loss goes right here, and we are risking 1 for 2. Okay, and all the way back in time, for example, so this was the entry and this was the stop loss level, and we are risking 1 for 2. Let us see if that was accomplished. That was not accomplished. I don't think it was accomplished. Let's see. All right, let's go and look at the past and see. I don't know. Anyway, on the smaller time frame, this would have been accomplished. Okay, this is the daily time frame. This is an example, because we always want to trade in the direction of what? The monthly band. Let's not forget what I said earlier. Okay, we must always trade in line with the monthly band. So let's assume we are trading a downtrend. In this case, we are going to be looking for a downtrend. We are not going to trade an uptrend, but I'm just giving you guys an example. Okay, so if we look for a market that is trending to the downside, okay, in line with the monthly time frame. Now let's say, for example, when the market was going up, when the trend was up, okay, we confirmed the trend back in time. Okay, so this market, okay, this one is down, monthly time frame right now is down. Okay, this is the monthly resistance band, so long-term view, prices should fall down. So let's look at a market when the market was, okay, for example, now this was when the market was at the level of monthly support band area. Excuse me. All right here, as you can see, this is monthly support band area. All right, so let's say we wanted to buy this market, we would have been buying in direction of the monthly bands. All right, the monthly band right here, price was here, so we are going to be looking for a short-term uptrend in this scenario, and we must confirm that the market has complete its uptrend and downtrend. So what is a high? So we must implement all of these stuffs right here. So we have a higher highs, we have a higher low here, and we have a higher high here. This is a high, and we have a low, a higher low back in time right here. So we have two highs and two lows, because right here, if you ask me, okay, if you ask me back in time right here, this was, okay, this is a low, this is a high. When these two candle closes here, okay, it created a high, it closed below. So a high is a center candle that we have two candle by the left, 1 2, okay, and two by the right, 1 2. That is what? That is a lower high value. So these two candle, okay, they are low compared to this middle candle. All right, they are low compared to this middle candle. That's why we have a high here. All right, so if back in time, if we are putting a trend line, there's no right or wrong, okay, if we are putting a trend line like this back in time, and this was supposed to be our entry position, okay, trend line broke, okay, counter trend line broke rather, okay, we are going to be learning how to use the counter trend line, okay, to find an entry position, okay. Our stop loss, like I said, there's no right or wrong, so we can decide where to put our stop loss, okay. We can decide either to put a stop loss here, okay, or decide to put a stop loss here. All right, now if this is the uptrend that we are trading, okay, normally our stop loss is supposed to come at the pattern traded, the previous pattern traded. So our stop loss is supposed to come here. So if we would have taken this trade in line with the monthly band, because we know that the monthly band, the direction, the monthly view, okay, the long-term direction is up back in time right here, we would have taken this trade, okay, without being afraid for nothing, for anything, put the stop loss right here, risk 1 for 2 risk reward ratio, okay, and we're just going to let the market run, okay, and we're just going to see how it's going to play all the way out, okay. And we keep holding and keep holding and keep holding and keep holding, and the market keep, moving sideways. So if we are risking 1 for 2 risk reward ratio, this is how we would have waited and waited. The market is going to play along the way, scare us, do all sort of mess, and finally the market will do what? It will finally go up and take us in on our profit target right here. How interesting that was. But this is the daily time frame. But if we can wait for that long, all fine and good. But if we cannot wait, then we trade this, this on the smaller time frame, and as early as possible, the market would have given us our profit maybe after 2-3 days. Sometimes it will take a week, okay. But those that are trading on the daily time frame, they would have waited for months before finally the market will hit their profit target right here, even without even coming all the way towards the stop loss area. All right, and this is all about, my friends all over the world, this is all about education, the proper education to help us, okay, grow in this business. All right, so hopefully this content is beneficial, or is going to be beneficial for you guys. Okay, if it's beneficial, if you see that this information, okay, this educational knowledge of this forex business that I'm sharing right here on YouTube, okay, as you're watching it, if you find it interesting and you like what you've heard from me, JVanFX, right here on YouTube, all right, please do me a favor, give it a like, give it a thumbs up, and subscribe to my channel, because believe me guys, this is just the beginning. All right, I'm a new guy in the forex business, and I'm a new guy right here on YouTube, trying to share, okay, my knowledge that I have also gained while studying this business on my journey. I want to share with you guys. Okay, so please, if you find this content helpful and it's educational to you and you like it, okay, please smash the like button and please subscribe to my channel. Okay, because you cannot imagine what is coming. Yes, believe me, guys, you cannot imagine what I'm about to unfold to you guys coming 2024. All right, I have a lot to share with you guys. I mean, a lot of forex beginner course. Okay, I don't know what to say. I just don't know what to say, but I'm not going to say much. All right, stay with me, guys. Stay with me, and you're going to get a lot of bunch of content that I'm sharing with you guys. I'm sharing a course. Okay, this is my course. This is my business right now, and I'm giving this to you guys, traders all over the world, forex beginner analysts from the scratch. Okay, I'm taking you guys from the scratch. If you have any questions, okay, drop a comment on the comment section, and I will respond to you in my next video, hopefully. And if you want to connect with me privately, no problem, I'm available. All right, guys. Okay, so this is where I'm going to stop the class for today. Hopefully this is beneficial for you. So let us try our possible best, as always, to reflect back to this, okay, to these drawings, and they are going to help you guys always, just like as it's helping me too. All right, guys, thank you very much for your time. I appreciate you guys for joining for watching this stream. I appreciate you. Hopefully we're going to meet maybe next week. I'll be coming live also to share more of my content with you guys. Thank you very much for your time. I appreciate all of you. I love you guys so much. I remain Jayvan FX right here on YouTube, and from me to you, it is